What's up YouTube, it's Louis here, I hope you're all well. We're taking a look at the weekly chart over here on Quant, and we're going to discuss this resistance over here, this key resistance of $150 we've been talking about on this channel. Now, I'm going to use the old Quant chart, the one that's just when you type in Quant USD, this is the one that comes up. We do on this channel use this other Quant chart over here, which actually goes back all the way until 2018. If you want this chart, access to this chart, it does only go back to the daily time frame. You can't use the 4 hour, it doesn't allow you to. So if you can use a daily, weekly and monthly on this. Some moves are a bit different, like this over here, and also the price levels. So in yesterday's update, I said this is the key resistance we want to focus on, and that is $168. However, if we go over to the actual Quant chart, this is a different level and it's actually only 160. And in fact, we've already tested it as resistance, whereas on this other Quant chart, we haven't just yet. So if you want access to this, it's under this video. Also under this video is the link to my Twitter where I do speak about the cryptos. For example, I was over in Greece over the last week and I wasn't able to make videos for you guys, so I was keeping you updated over on my Twitter. The link to that is in the description down below, or just simply type Louis_crypto. I'd also ask you guys if you could help with the algorithm by liking, subscribing and commenting under this video. Turn the notification bell on so you're notified when I do actually upload. But yeah, we want to focus on $160 now. So I'm using the old chart, remember, just the regular Quant chart. So we did run into this as key resistance 150. We were using this as a psychological level. Now we know in trading we don't want to just rely on just solely one thing, and that one thing would be just the psychological level. Because it is 150, it is a key support and a key resistance. And from this point in the past, this is where we saw an impulse all the way up until $400, let's say $30, down from 150, as well as when we came down to it again, we saw a further impulse down from 112 to $230. So over 100% move from this support. You went under it, correct, but you reacted from it before this candle closed. So you see this big wick, you were down here before this daily candle had closed. Before it closed, you reacted. The only reason you reacted is because this area of $150, this psychological level, was a key area of support. And we can see the exact bounce of 150 right there. So we know going forward, this is key. We should expect reactions from this. So that's why we got this final pump. It wasn't strong enough to keep us in this uptrend to make a higher high. We failed to actually, we failed to make the higher high. We made a higher low over here. This is higher than this low, but you couldn't make a higher high. It resulted in this head and shoulders pattern, which I was able to give you. But at the time, no one really wanted to hear it because everyone knew, oh, we're in a bull market. So it's the same down here. We see this inverse head and shoulders we've been talking about for a couple of months on this channel. And no one wants to believe it, and that's because we're in this bearish market, we're in this downtrend. So just like when we were in this uptrend, no one wanted to believe this bearish pattern. Well, now we're in this massive downtrend and no one wants to believe this bullish pattern, and we have broken out, and $400, our target, is valid. We should be going there. That is our expectation for Quant. Quant should be, and in our minds, should be going to 400. That's why we are in Quant, because Quant is going to $400. Quant is in a bull market, but we can't get ahead of ourselves. We can't just believe that this 150, this in around $150 resistance is not going to get a reaction, because again, in the past, it's what sent us from 150 to 400, from 111 to 240, all the way from 150 down to 40. So we have to anticipate there's going to be some sort of reaction over here. We hadn't even retested it. We hadn't even tested it over here before rejecting it. You were feeling it, but we didn't even touch it. We just broke through it like butter. So because we've broke through exactly 150, that psychological level, I need to go back. I need to look to the left. The structure leaves clues. I need to go over to the left, look to the left, and I see that the highest wick in this range over here is around 160. So until Quant is close, we need to see Quant closing above this, because if it's not technically, out of the woods yet. We can say it's above our bear market level. Quant is in a bull market, but because we haven't actually even reacted to this, you know, we might get pushed under this bear market level, which could be seen as a bull market one now. As long as we're above this, we're bullish. But because we haven't reacted from this, we're reacting to it now. This is what could send us under this. So don't get disillusioned to the fact that we're completely out of the woods yet. We're not at all, guys. We're not at all. What I personally would like to see on the weekly time frame, we can quite clearly see, if I turn off all the drawings, that we're about to form this weekly bullish cross. But a complete fact is we are above the 55. So on the weekly time frame, technically, yes, we are bullish. We are in a weekly bull market for quant. But this is only the first step, okay, guys? This is only the first step, and this is why we can't get disillusioned to the fact that we're not out of the woods yet. So again, we need to form this bullish cross. This could mean, if we turn on the drawings again, this could mean we need to see this 20, this purple one, go over the orange. So that means we need to see price still going up. So we could be going up. Again, this is the weekly time frame. So each bar is a week. We could be going up for some weeks, which could lead to some months, okay? We could keep going up until here. But quant right now, I'm not personally buying quant. I'm going to wait for the confirmation of this weekly bull market. Yes, right now, we are bullish. We're above this bear market level. So technically, I could make this green. I'm not going to, for why I've been explaining in this video. But yes, technically I can make this box green to show that it is support. But I'm not too confident just yet. And that's why what I'd rather do, even though it's bullish and we are in a target to 400 out of this inverse head and shoulders, which not many people want to believe in, just as not many people wanted to believe into this. And yes, we're above the 55 weekly, which signals that we're in a weekly bull market. Yes, correct. But I want to see two things. I want to see us clearly breaking above 160 on the weekly time frame. I want to see this actually crossing over, which is just the first step. So crossover, amazing, bullish, amazing, go up, keep going up. Wherever it stops, it might stop here. It might go up until this resistance, might stop randomly anywhere in these zones over here. It could stop anywhere over here in this area over here. It could stop, or could go until up there. But wherever it does eventually top out at, it needs to fall back to these EMAs, and it must confirm this newly formed weekly bullish cross as support, because if not, it means the whole move above here is a fake out. We fall back under these EMAs, and that means this whole move for quant to the upside is all BS bullshit, and we're actually going lower, much lower, and this is just a fat double top, or they're going to say this is a double top over here, and yeah, it's just a massive M pattern to hell. But again, they're going to be saying that when we're up there, and it might look like we could be forming an M, but again, everything step by step. So that's why I'm not even getting too excited right now. If we do break above 160 on the weekly time frame, then yeah, we're going to see some weeks, maybe a month or so, going up. But eventually this is going to form the bullish cross, and wherever this tops out, I don't care what price it tops out, you can decide to sell. I'm not doing anything with my quant. I'm just going to wait for it to come back down to this newly formed bullish cross. Hopefully it holds a support. That is your entry point if you're out of quant. If you want to buy some more quant, that is your entry point. We might go up all the way up to here. The EMAs might drag out to here. You might kiss that. That is the point you have to buy quant. Yes, right now we're lower, but you don't know where these EMAs are going to hold. You don't know how high it's going to go up. So rather than trying to guess where the F we're going, let's just let this go up. Let these EMAs form a bullish cross. Let it hold it as support. And when it does hold it as support, that is where you buy it. Just keep it as simple as that. There's nothing to worry about day to day. We're waiting for this now, yeah? We're waiting for exactly this. There's nothing much else to say. I hope you've enjoyed today's update. Like, subscribe, and comment. I have 30% off my course until Monday. That's £100 off my course. Message me for more details over on my Twitter. It is in the link under this video. I'm also going to be doing £100 off my mentorship, as I've got a few slots available. No one has messaged me for the mentorship or the course yet, so get back to me before Monday if you want to take action. Thank you.